Imagine waking up every morning knowing $2,800 will land in your account every month for life. It sounds like financial freedom. But how much do you need to invest to achieve this, especially using the Schwab U.S. Dividend Equity ETF, SCHD? Today, we'll unpack the math and strategies behind making this goal a reality, whether you have 30, 20, or 10 years to prepare. By the end, you'll see how you can start with just $10,000 and small daily contributions to get surprisingly close. Let's take a look at a common scenario. Saving $200 a month earns just 1% interest. After 30 years, that totals around $90,000. This isn't enough for a dream retirement. Enter SCHD, not just any ETF, but a tool for dependable income. CHD focuses on America's most stable, profitable companies, investing in those with a proven history of paying and growing dividends. Every stock in SCHD pays out regularly and has met strict financial criteria. To join, companies must have paid dividends for at least a decade. They need massive scale with market cap over $500 million and sufficient trading volume for liquidity. The meticulous ranking and re-ranking of candidates is crucial. SCHD scores based on 4 pillars: current yield, dividend growth, ROE, and cash flow. Only the top 100 companies make the cut with rebalancing every quarter, ensuring a lean, focused portfolio for income and resilience. CHD slipped by about 1.93% over the past year. This might seem alarming, but context is key. Market shifts happen. Despite short-term issues, SCHD boasts a nearly 52% return over the last 5 years and over 91% in the past decade. Price fluctuations are normal, but SCHD is built to weather storms and thrive with time in the market. CHD's strength comes from its sectors and brands: consumer defensive stocks, energy, and healthcare. Top holdings like Coca-Cola, Pepsi, and Verizon offer reliability with essential products and services. SCHD maintains an ultra-low 0.06% expense ratio, keeping more money in your pocket. Currently, you can earn about $14 in dividends per share annually, paid quarterly. Start by envisioning your retirement lifestyle. It influences how much income you'll need. Investments must support you against inflation. SCHD can increase its dividend to help stay ahead. Consider longevity. Many live 20 to 30 years. We're targeting $2,800 a month, $33,600 a year. For some, that covers all basic needs. For others, it's a supplement. How do you reliably reach it and set yourself up for that income to grow with the cost of living? The magic ingredients: current dividend yield, dividend growth rate, and share price appreciation. As of today, SCHD's dividend yield is just over 4%, with a 10-year dividend growth over 11% annually. Suppose you start with $1,000 invested in SCHD. Year 1 gives you $40 in dividends. Reinvest that for growth. If you have 30 years until retirement, even small regular investments can explode in value over time. Let's crunch real numbers, starting with a 30-year strategy. This is great if you're in your 20s or early 30s, but even those in their late 30s can benefit hugely. If you begin with just $1,000 and contribute about $8 a week, by the end of year 1, your investment will double to $2,000. After a decade, it's projected to grow to about $10,000. Fast forward to 20 years, your portfolio could reach $49,000. By year 30, you may have a nest egg of roughly $286,000, enough to cover major living costs. Now, what if you've got just 20 years? Start with $10,000 and add $3,640 each year. In 1 year, you'd be at $15,000. At the 10-year mark, your portfolio's projected to hit $94,000. By year 20, it could be worth $439,000. If you only have 10 years to work with, your plan needs to be bolder. Invest $100,000 up front and contribute $20,800 per year. In just 1 year, your portfolio's already grown to $132,000. By year 10, you'll have about $668,000. The dividend income at that point is about $35,000 annually, or $2,900 each month. What if you only have $10,000 plus $1 a day? Time and discipline can work wonders, compounding your money over decades. Remember, the more time you give your money, the more incredible the results, thanks to compounding. SCHD's set it and forget it approach lets you relax and watch your income grow. Check in on your portfolio every year, but resist the urge to panic at every headline or correction. Stay focused on the goal, $2,800 per month. With SCHD, you're stacking up small wins every month and every year. Put yourself on a predictable path to the dividend income you deserve. What happens after you've built that income stream? Your portfolio becomes a reliable business that pays you. If you continue reinvesting, your income potential skyrockets. That $2,800 a month can grow to $3,200, then $3,800. Alternatively, if you're using the money to live on, you can count on a more stable experience than someone guessing the market. Dividends are taxed, but ETFs like SCHD offer tax efficiency. In a brokerage account, qualified dividends are taxed at a lower rate. In a Roth IRA, you enjoy tax-free growth and withdrawals. In a traditional IRA, dividends grow tax-deferred. It's critical to consider how much you invest and where you invest it. Tax planning gives your strategy a defensive edge. In your 20s and 30s, establish habits and compounding progress. In your 40s and 50s, scale up contributions. For those in their 60s, position your portfolio for stability and income distribution. SCHD fits nearly every stage. If you reach your retirement goal, but the market dips, SCHD dividends may remain stable, as companies often continue to pay during recessions. SCHD holds diverse companies that people rely on, like consumer staples and healthcare, mitigating risk during economic stress. Automation is another massively underappreciated secret ingredient in long-term investing success. Set up auto investing and dividend reinvestment. Remove emotional decision-making. Don't time the market. Discipline always beats timing. Monthly contributions, even small ones, paired with automatic reinvestment, turn into dependable growth engines. You can use platforms like M1 Finance, Fidelity, or Charles Schwab's own brokerage to manage this effortlessly. Another often overlooked benefit of a portfolio like this: legacy planning. Imagine passing on not just $500,000 of assets, but an inheritance that continues to produce income for your loved ones. When you know that money will be there for rent, food, healthcare, and maybe even vacations, you unlock something magical. That's why this isn't just about dividends. This plan doesn't take genius or luck. You don't need to be a finance major or a market whiz. With tools like SCHD, all you need is a basic understanding, a realistic timeline, and the courage to stay consistent. Open a brokerage account. Decide your timeline, 30, 20, or 10 years. Look at your budget and contribute weekly or monthly. It can be as small as $7, $12, or $25. Pick SCHD. Start investing. Let dividends reinvest automatically. Repeat. You're not saving for retirement anymore. You're buying income. Every dollar you put into SCHD is a down payment on a paycheck. Financial independence isn't some myth or millionaire-only club. It's achievable. It's practical. If you start today, your future self will thank you tomorrow and every day after that. There's nothing like waking up knowing your money's working for you, even when you're not. If you found this video helpful, give it a like, share it with someone who needs to hear this. Drop your retirement questions or goals in the comments below. I read them all. Hit that subscribe button for more deep dives into dividend investing and long-term wealth creation tips.